Good night everyone and welcome to another technical video day. Today is Monday, October the 24th, and we're going to cover most of the pairs and what we try to forecast what we see for the next 24 hours of trading. Now, the US dollar is being under a lot of selling pressure, but the first things that I wanted to point out to you guys is the divergence that we're getting within the RSI. That's telling me that the move is exhausted and the move can be ending pretty soon. Now, how many scenarios do we see on the dollar? Technically, we see three scenarios. The first scenario is our principal count. It comes with 1, 2, 1, 2, 3, 4, 3, 4, and a 5. If that scenario is in place, it looks like the US dollar, like the euro, is within the ending diagonal right here, that it needs another marginal low before this pair start rebounding. This scenario is a competition of 5 ways from here to here and require a 3-way back in the dollar minimum. Not to be said that maybe this is part of the huge flat and it can go higher. But well, all we care now is that at least 3 ways back in favor of the dollar should happen. Now, look at the divergence in the 4 hours right there. Now, the second scenario is about the same result. The only difference is that we got a B-way triangle, but to be honest with you guys, I'm having issues labeling this move from here as a 5-way in. I mean, this move as a 5-way. So technically it needs to be a triangle, and then still we're gonna get a bounce on the dollar in 3 ways to around 78.50 area. That's the second of the scenario. And the most bearish of the scenario is the one that counts like this. It counts like this is A, that this is B, and then what we're ending right now is wave 1 of C. What we're ending right now is wave 1 of C, and then we're gonna get a bounce on the dollar, but this high is gonna be respected, and then the dollar is gonna turn lower again. Those are the 3 scenarios that we see within the US dollar. Now, the last one, which is the most bearish one at this stage, is calling that if that's the case and that's wave 1 right here, we should get then a wave 2, and then the dollar is gonna get some legs around 74.19. That's the most bearish one in the short term, but at the end of on the other hand, is the most bullish one in the long run, because it's confirming a 3-way move with a triangle B-way on the middle. So keep that in mind. I believe that no matter which one it is, a bounce is happening tonight and tomorrow within the US dollar. Now, let's see the dollar in the short time frame. If we take a look from the high right here, this is the low that can be in the dollar, either a way of wave 3. So if it's a wave 3, where you got 1, 2, 3, 1, 2, 3, 1, 2, 3, and then 1, 2, 3, 4, 5, 6, 7, this is 3, and then you got right here a wave 4, you got a wave 4 within the diagonal, and then you got right here, you got A, a B wave, and then you're going to get a marginal new low. That's very possible. Now, the other one is the one that this is A, and then you got A, B, C, D, E. But what I don't like about that one is that this right here, it looks like it's too, like I say, it's too contracting or too big in times to this small wave too. Another one is that this is the B, and then you got like a 1, a 2 in an irregular, when you got A, B, and C as a flat, and then you got 1, 2, and then you got 3, 4, and a 5, and that's the one that I say that is the most bearish of all. And then what you're gonna get is 1, 2, 3, and then the market is gonna start selling the dollar around this area, in the euro around the 137 and change. That can be a possibility right there. So that's what we see on the dollar. We open up a little bit today due to the fact that the oil, that was the one that was leading our forecast in some degrees, it turned out to be a B wave flat. And oil did a huge move to the outside, and then that makes me to believe that oil together with the S&P are in those type of correction that we call a straightforward correction. In other words, there is no a B wave well defined. So all it matters in oil right now is that from the lows right here, it did 1, 2, 1, 2. It looks like a 3 ending soon, a correction, and 4 and a 5. We've been saying that oil is going to test, it's going to go straight out to 95. It's going to go to 95 or to 100. And guess what? That's where we are, 97.40. Looking at the 4 hour, it looks like it completed A, it did a flat B, and then 1, 2, 3, 4, 5 to around 97.40 before going lower. That's what will lead the scenario in the dollar that can count for a little bit or more of the bearish to the downside. Now, that's for the dollar and oil. Let's move on to the individual pairs. On the individual pairs, let's start with the S&P. As you guys know, S&P is a huge part of the risk trade, and today S&P trade higher. We thought that it was doing like a type of ending diagonal, but most important, erase all divergency. That means that all we got from the lows is a three-way in the S&P, and that means that is a correcting move to the upside, correcting the whole move from the top. Now, just today, we have the 618, testing the 618 of that move. So the S&P, if this count is correct, and we have a three-way, the S&P should trade higher to around 1282 after 5 ways from these lows. In other words, it got like another 20 picks or 30 picks to the outside before a possible topping. Now, taking a look at the area, and that means the risk can be on. So that's why we leave the scenario open for the bearish, a little more bearish count within the euro. But, I'm sorry, within the dollar, but we really believe that the dollar is bottoming. In other words, is ending a cycle. Not necessarily needs to be everything at the same time, but guys, you gotta be careful with both sides of the markets. This market is at the edging right now. We don't recommend at this stage either side. I mean, if it's a swing trade like the dollar cat, okay, leave it there. That's another scenario. But you gotta play with a small stop and taking side. But keep in mind that the risk trade is ending a cycle. Now, this is the euro dollar. Look, what you got from the lows. 1, 2, 3, biggest correction in the middle. 1, 2, 3. So you got a 3, and then same as the dollar. I like the ending diagonal scenario when now the euro is going to trade around 38.71 and bust higher one more time. I like that scenario when I see 1, 2, 3, 4, 5. If it's a triangle, here, this is too big. This is too big in order to be a wave fall compared to this right here. So that's what we're favoring the diagonal here. Look at the RSI. Divergence on the new high right here. You can see on the RSI the 3 swing right here. You can see the 3 swing right here. And the euro should make another high with divergence and then dropping. And then that's what we're favoring on the euro, guys. But keep in mind the scenario when we can be in some type of, I don't know, triangle, and we end in 1 and we're going to trade lower in 2, something like that. Keep in mind, because the S&P is bullish. Now, let's take a look to the other pair that I want to show you guys is cable. Cable also is calling for almost a cycle coming to the end. Look, A, B, C, A B, C, A, lesser degree, a B, Z. I can see even 5 ways coming to the end from here. And alternative is that in cable we have A, B, C, and then this is A, and then we got right here, this B is right here, and then we got 1, 2, 3, 4, 5. If that's the case, we got a B, and then we got 1, 2, 3, 4, and 5, allowing another high in cable. That can be an alternative. But this move looks very completed. I mean, the dollar trade looks very exhausted. And I believe that a pullback should happen at any moment in the dollar trade. Now, let's take a look at S&P within 1 hour. S&P in an hour, this is what I've been telling you. Look, 1, 2, 1, 2, 3, 4, 5, 3, 4, and a 5. Most important, look at the RSI. You see, right here you have a higher reading, 303. You see divergence. Now, that's a divergence. You see the flat here. And most important, from this low, you don't get divergence yet. If you go a little small right there, like a 15-minute chart, you can see that from the lows, it looks like it did 1, 2, 1, 2, 3, 4, and it's ending wave 5. The high today is the 2618 or wave 3 or wave 1. So I'm expecting some time a pullback in risk tomorrow. And then one more high will complete a 5-way move from here. And that's like everything, guys. From there, after 5, so 2 combinations for 5, you have to release, you have to wait, and you have to see what the dollar is going to do. But most, the S&P also is going to do. But most likely seeing 5 ways from the top, that should be enough to be a point of reference in a possible downside move within the S&P. Then I want to show you the euro yen. Look, this is the euro yen when like the dollar index is showing like the dollar index is not participating in the whole risk trade. In other words, the euro index, Same with the euro yen. Look, euro going higher, and we have an A wave and a triangle B wave. This is telling me that the euro dollar most likely is about to trade lower. Look at the Aussie yen. Look at the Aussie yen. Same scenario. Aussie, New Zealand, and CAD making new lows, and the yen very strong. It's telling me that the move in risk can be a fake move, because this is calling for risk aversion to come to the market in some degrees. Now, let me take a look at Aussie in the 4-hour chart. And it looks like it's a 5-way move, like we've been saying. 1, 2, 3, 4, 5. You can see the divergence that we have right here. It looks like Aussie is calling for 105.36 before a pullback. Taking a look at Aussie in a 1 hour. Taking a look at Aussie in a 1 hour, we got 1, 2, 1, 2, 1, 2, 3, 4 in a triangle, 3, 4, 5. If you take a look at the Fibos, the move from here ended exactly to the point at the 618 right there. So from here to here, a 4 and a 5 ended at the 618. And then it comes this 1, 2, 3 ended at the 618 area. So what we are expecting in Aussie is like in the euro, like in the dollar, one more marginal high. 105.34, 105.50 area can be the case. Now, let's take a look at the open trade that we have, which is the dollar CAD. You guys can see that we're laboring the dollar CAD as it's doing like a B wave flat or a C wave already. How we're laboring A, B, C, W, then A and a flat B and a C wave. This is a 3-way. So maybe if this is S right here, all we got is A, B, Z, W, S, A, B, and C. I see the CAD that should find support at any moment, and in extension 99.41 is an extremely good support right there. Also, if we mention 1 and 3 right here, that's the case, 99.85, which is our third entry in the dollar CAD, can add as support. So in general, guys, let me give you the conclusion. We see like a possible cycle is ending, but we see like S&P and the oil trade can have at least 2 more highs before a significant top can be formed. So not necessarily they need to top at the same day, but we like the idea that the euro dollar, the Aussie, cable, and even the dollar CAD can be done with one more low or high. So maybe the dollar is going to top or bottom first, and then the S&P and the oil is going to follow. So keep that in mind. I believe that it's worth the risk to take at least one long dollar position with a small side and a defined risk. All right? Hope you guys enjoy. Keep in mind that the yen trade is not following this move in risk on. All right? Thank you, guys.